All right, let's bring on board then our chartists and find out what the markets are spelling out for us this morning and levels to track as well as top stock recommendations. We've got Nooresh Merani joining in as well as Kunal Bothra. Morning to both of you gentlemen. And Nooresh, let's get in a flavor. Well, we're sensing that right now maybe a flattish mood is the order of the day, but that is not necessarily going to be bad news and is going to be fairly welcome given all that's transpired across the globe.
So we've gone up well from 16,800 to 18,100, 18,200 levels. The last major highs are also around this price point. So a little bit of a pause in this area would be a good consolidation for the next leg of the move. So for now, 17,800 becomes a base, 18,200 becomes a resistance. And once we pass some time here consolidating, then it can be a move towards 18,600, 18,800. So overall, the trend is still positive. In this period, I would expect more stock-specific action. The index heavyweights could take a pause, but the selective moves which have been happening in the broader markets should continue. Bank Nifty also at 43,000 to 44,000 zone is a consolidation zone. 44,000 roughly is the previous high. So tough to take it out in the first attempt itself. So a pause here in this band of 17,800, 18,200 should be taken as a time to be more stock specific rather than index specific.
All right, Kunal, let's get in your take on the markets. Yesterday, we slipped below that 18,100 mark. It had been a commendable feat that we managed to conquer that. What's in store for us now? What's happening to the Nifty Bank Index?
Good morning, Avan. So, we were flagging off 2 days back that how the indices have come back towards a major resistance zone, both on the Nifty as well as on the Bank Nifty. I think we are now looking at a pause, which could be a slight bit more extended for the indices. I was actually expecting maybe 2 days or 3 days of consolidation, but looking at the setup of the markets across the globe as well as for our markets, I think the setup may just, the consolidation may just extend itself for a few more trading sessions for the indices. But then I think that should ideally be a good opportunity for traders who missed out on the index trades earlier. So, for example, from the Bank Nifty perspective, 43,500 odd levels is where, we initiated to book profits. I believe now, possibly if the index corrects back below the 43,000 mark, say comes closer to 42,800 odd levels, that could be a point where traders could look to initiate a fresh buy. There is hardly any change in the open interest in terms of yesterday's data. And that was a bit of a surprise because even after yesterday's downtick on the indices, marginal downtick on the indices, I was actually expecting that maybe there could be some bit of long unwinding, which could probably creep in into the indices, but there was just hardly any kind of change in the open interest data, just 0.2%, 0.5% change in the open interest for the indices Nifty and Bank Nifty. That itself tells you that traders are also on a wait and watch mode for the indices and not tweaking too much of their position. So looking at the stance, would maintain a consolidation stance on the indices and the action to be more towards the mid caps and small caps.